This is our Forex blog for September 27th, 2012. One of the first steps we use in our three-step Forex trading system is to use our currency meter. We then want to sort it to find the strongest currencies on top. The New Zealand, Australian, Euro, and CAD are the strongest. At this moment right now, the dollar, Swiss, pound, and yen are the weakest. And basically, our real-time trend strength shows up on the top. And this is made up of multiple different tools that measure the direction the New Zealand's going in versus all the rest, and the intensity. So anytime it's at and above the 80 level, it's extremely strong. Underneath that, we have the 15-minute trend, hourly, daily, weekly, monthly. The more time frame trends that line up, the more odds of that trend continuing, obviously, and you want to trade the New Zealand and the Australian as well. It has a weekly trend that was down earlier today. The monthly trend's down. The weekly trend shifted up at 7 and stayed up after 10:30. Obviously, the New Zealand's the strongest of all of them. The Swiss, extremely weak. And the dollar, for the most part, on most of the time frames, is weak as well. So you could focus on buying the New Zealand dollar. Let's bring that chart up. Notice that, basically on every little pullback, this goes up. Pulls back, goes up, sideways action here and up. And there's two main methods that we use for entry. Basically pullback trades and sideways consolidation. This would be an example of a pullback trade. Up near upper containment bands, you don't want to be buying right up there. You want to wait for a little bit deeper pullback. Here's a pullback trade. And then anytime it goes sideways for 30 minutes, and I prefer 2+ hours, 2 hours or more. You can see it went sideways for more than 2 hours when it broke out right here. Unfortunately, that first trade was a failure, but it went up. It would have been in around 92. If you get stopped out of a trade too soon, or as this thing starts going up, you move your stop from underneath here, underneath those bars right here, you might lose 5-6 pips. Basically, a lot of times, if a currency doesn't come back down and go underneath this low, then you want to take the second trade here, and you can see that second one went up from around 88 all the way up to 22. So that's the 30 pip move. More than enough to get back a 5 pip loss. So, traders, especially new traders, are focused more on their winning percentage than they are on how many pips they make. You can be wrong 75% of the time and make money if you have huge wins and small losses. So the winning percentage game is really an amateur's focus and obsession. Professional traders care more about pips. You lose 2 pips, you lose 7 pips, you make 30. You've made money even though you're 1/3 right. And so you can use our digital signal processing based moving average. Usually 6 to 10 bars underneath the moving average is a decent pullback. So you got 1. This one, went back above it, but it never really shot up. So I'd count that 2, 3, 4, 5, 6. So basically from 6 to 10 pips, once it goes back above there, you can look to buy, and you have a very nice profitable trade. Earlier 1, 2, 3, 4, 5, 6. If you bought right here earlier, put your stop underneath the low here. When it starts to go your way and then comes down against you, if it comes back up again and doesn't break this high, you want to yank your stop up, pretty much underneath those bars so you can get out of these kind of trades with, pretty much break evens, and then wait and see what happens. It kind of goes sideways. I'd wait, take that breakout here. Obviously that one failed. Second one worked. Let's scroll these back, and I'm going to link them all together so they all link together and scroll back at the same time. You can see the pound strong on most time frames. And when you see a lot of strength, 30 minutes of weakness, hour and a half of strength, about an hour here of weakness, it's pretty safe to assume the strength will come back. And sometimes it does for 5 or 10 minutes. Then there's some weakness, and then later on the strength comes back again. You can see it didn't have a lot of intensity for another hour. But you can usually anticipate, usually currencies are strong if the trend's up on most time frames from 30 minutes to 2 hours. Then you get 15 to 30 minutes of weakness up to an hour, and then you can assume some strength again. So if you have a lot of weakness right here, it doesn't matter because all the time frame trends are up. This is a pullback that you want to look for buys, coming up to 7 right here. So and you don't know at the time if it's going to be 7 or not, but it starts to have some strength here at 7. So which one's one of the weakest ones? Well, the Swiss is weak on all time frames. The dollar is as well. So you could be looking for pound dollar buys at 7. Let's scroll this back at 7 so we can see what it looks like. And let's put the digital signal processing based moving average on here too, so you can see, a very easy method of pretty much you can't screw this method up. If you wait for a 6 to 10 bar pullback underneath the moving average, once it starts going back up again, it's pretty decent buy. So here you got 1, 2, 3, 4, and then it breaks out 5, 6, 7, 8. So that's between 6 and 10 pips. I would have went long right here at 0.4. Put my stop underneath this bar's low, and you never know if it's going to come back up to the high and or stall halfway back to the high. Usually it goes halfway back to the high or not. So kind of eyeball the halfway point, 62.09. This is the previous week's value area low, so it's a major resistance area. It went up with a lot of momentum. The pullback had a little bit of weakness and a little bit more weakness. Once you're in a trade, you want to watch this from real-time momentum. So that bar went down. We might get stopped out on this. It didn't. If it goes back up again, because it went my way, then came back against me, I'm going to move my stop up to break even. And I'm going to yank it up probably underneath this bar. I'd rather just lose 4 or 5 pips, get back in it again, because this one had an opportunity to go up and it failed. So I get stopped out here. All right, this has a lot of momentum, so I get long again here at 0.4. Put my stop underneath these bars. Hit this resistance area. Now, a lot of times, and it's up to you whether you do this or not, if I take a trade and lose 4 or 5 pips and I'm up 5, 6 in another one, sometimes I'll get out of half. If it's the first trade of the day, I try to get out at break even, so the next trade I'll get my profit back. And so if I did that, you can see it's still strong here. If I got out of that and pretty much made break even on those 2 trades, I'll take another stab at it if it breaks out. Notice the upper containment band's up here. If it breaks above the 10-day moving average, it's got a lot of room to run. And so it never breaks out. All right, so I might be long here at 14. I'm not going to have my stop all the way down there in the bottom. I'm going to put it kind of really close here. I do not like to, and I always feel uncomfortable buying breakouts up near the high, but this one does have room to run. You got to watch this momentum by the, like a hawk. So it went a little bit my way, then came down, starting to go back up again. I'm going to pretty much time my stop at break even. This is a risky trade. Should take off here. Notice the momentum spiked. And it looks like we got out of that trade at break even. So you can take some riskier trades, and once it starts going your way, move it, to break even. This trade, most of the time is going to work. You got a very strong pound versus a weak dollar. I'm going to be a little bit more hesitant to buy it the next time. Remember, 6 to 10 bars underneath here, 1, 2, 3, 4, 5, 6. I'd like to see it, go down at least 1 or 2 more bars before buying it again. Fortunately, I probably would not have bought that one, and this one's the one that's going to run. Sometimes breaking the rules pays, but you also always want to watch the currency meter during that time too. Let's scroll this back. You can see the pound had a little bit of weakness right there. So we might, if we were watching the currency meter, we might not have taken that one trade. The dollar is extremely weak at that time at 7. And you can see a little bit of strength in the dollar, but not a lot. It kind of lessens off. So if you watch the currency meter, there's no doubt you probably would have taken that trade, not the euro dollar, the pound dollar coming up here. Oh, I don't have that chart linked. Here, let me link this chart here so it's lined up with the currency meter. It has to be red. There we go. Now when I scroll this back, we can see what the currency meter looked like at that time, 8:30. Pound was actually pretty strong. The dollar, it was weak for the last couple hours, and during the pullback phase, it really didn't have much strength at all. So, the pound dollar at that time, despite the not having pulled back enough, it was very likely to go up, as you saw from the currency meter. Now, as you're in this trade here, going back up, let's go back to the currency meter and take a look at it. Pound showing strength against most of the currencies. The dollar's showing a little bit of weakness, not a whole lot. Let's take a look at it. If the dollar stays the same weakness or starts to tick up and you see strength in the pound, here the pound lost a little bit of strength. The dollar increased its weakness. They both are super strong and weak here. And so at this bar right here, if I was in that trade, it's a good place to at least exit half your trade. If you're in this at 11, you're out at half at 30. So you made 19 pips on the first half. And I'm going to wait and see what happens on the next bar or two. I'll probably put my stop somewhere down near the displaced moving average. And out of the second half of 27 then. The currency meter, as you saw in that example, really showed that the pound dollar was a good one to be trading. Let's look at the CAD here. Weak on all time frames. A lot of weakness here, a little bit of strength. Weakness comes back. You can trade the pound CAD. Now let's bring this chart up. This is not one that we leave running. Coming up around 8 o'clock. Strong pound, weak CAD, and you can see pretty much shot up from 59.40 all the way to 59.86. And it's not a coincidence that it stalls pretty much right near a fib target, like the 1.618. Now, anytime it stalls at the first fib target, I tend to get out of half my trade, put my stop underneath these bars low. When it goes up and stalls at the 1.618, I get out of the second half. So my average exit would have been halfway in the middle here, somewhere around 80. So I would have been long probably somewhere around 40, and it went up 40 pips. So the currency meter is very good when you use it the way it's intended. You buy the one that's strong on all time frames, or most of them, and against a weak currency that's weak on all time frames. Now here you had a lot of weakness, a little bit of strength here, but not the intensity of the weakness, and then the strength kind of fell off. This is how you anticipate the trend resuming. The forces are down. It went up for quite a while, a little bit of weakness here, a little bit of strength here for about 45 minutes, and then it fell off a cliff. It's safe to assume that the weakness will come back. So if you find another one that's strong on most time frames, it's safe to assume the pound will resume its strength. And it did, and obviously here it has a little bit of weakness. After about an hour to 3 hours of weakness, at 11 o'clock you could start looking for buys again here. Typically I look for buys after an hour and a half to 3 hours of weakness. If it's strong for 8, 10, 12 hours pretty much in a row, then I'm going to anticipate 3 hours of weakness. If it's strong for 2 or 3 hours, then hour and a half is enough. And then you can start looking for the weakness to fall off, get less weak, and then anticipate the strength coming back. And sometimes it comes back and stays strong for a couple hours, and sometimes only for 5, 10, 15 minutes or half an hour. But usually that's enough to move your stop to break even, and worst case scenario, break even or make 5, 10 pips on a trade versus losing.